Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is August the 14th, 2023, Monday, and it is 3:11 p.m. Central Time. We still have 49 minutes left in the bond market and mortgage-backed security market trading day. Big news coming out this week is going to be the comments coming out from the Federal Reserve. So the Federal Reserve, when they meet, they have their discussion, and then they will have their announcement the following day, usually about 12:30, I believe, is when that comes out. Now, there's notes about all the conversation that is being had in the meeting the day before. Those notes are kind of compiled and gone through, and then they are released, and that is going to happen this Wednesday. And investors really look further into the comments from the members of the Federal Reserve Board to get a better feeling of what each of them feel about the economy and what they're going to do in the future. And the big thing that we're really trying to figure out right now is, are they going to continue to raise the federal funds rate when they go into the September meeting, going up another quarter? And that seems to be what I'm hearing from more and more people, is that they do expect the federal funds rate to continue to go up, which again, I'm not for. If you watch this show, you know why I feel that it's time to take their foot off of the gas and put it more into a coast mode and let the effects of their movements actually take place in the economy, instead of dousing that fire completely and putting us into a worse position than maybe we would have been otherwise. So let's take a look and see where the mortgage-backed security and bond market are sitting today. Let's jump over here. Currently down 36 basis points. Not a good thing to see. Again, another down day. 10-year Treasury is up 2 basis points. Here we are right now sitting on the Fibonacci level of the 98. So this is, fortunately, acting as a floor of support underneath us. Hopefully we will be able to bounce over. We do have some technical indicators down here with the stochastic levels that do allow us to believe that we may start to see a bounce and come back up higher. But we do need to get some news that is actually, and it's strangely enough, kind of negative for the economy. Again, take a look at the consumer price index that came out, and what we have coming on later on, which is the personal consumption expenditures coming in at the end of the month. And what do we expect for that? Well, unfortunately, there's not a lot of reason to believe that we're going to have a very good number when it comes to year-over-year readings on the personal consumption expenditure. So we need something else to come out. And really, the one X factor that might come out would be showing not good news in the employment sector, because we've been continuing to see very strong employment numbers where I just don't see that actually being the case. However, we're starting to look a little bit further into the employment numbers and finding that many of the jobs that are being attained right now are part-time. We're talking about hundreds and hundreds and hundreds of thousands that are part-time, where that big number that comes out doesn't disseminate between the two. But that is obviously a big difference. So let's go back here and take a look at where we are. This is the mortgage-backed security chart here, sitting on the Fibonacci level there at 98. The 10-year Treasury, let's take a look at that. We like to really allow that to kind of give us a lead as well. And you can see that we're sitting just under a ceiling of resistance here, which would be at 4.233. We're at 4.191. So again, both a floor and a ceiling in the place that we really need them to hopefully see those act as a stop for us and begin to turn the other way around. Where are we as far as interest rates right now? Well, let's take a look here at the Brent Bruce Daily, the very well qualified 30-year fixed conventional home loan, 800 FICO score, primary residence. And while we're running this again, if you have a client in Tennessee or California that could use lower interest rates, please reach out to us. The information, the contact information is always in the notes below. All right, so the Loan Store right now leading the charge, 7.375% with just a little credit here of $133. Let's open this up and see what it looks like if we were to pay a point. For a point, you're at about 7.0, so we could probably get a 6.99 with one of our lenders here. Where's our 5.99? Well, again, this lender only offers a 6.0, so we're looking at almost just under 400 basis points or 4%. So it's a long way to get back to that 5.9, that 5 handle that we've been talking about for so long. Let's take a look at a couple of the other lenders here. We always like to take a look at United, nation's largest wholesale and actually nation's largest lender right now. They are 7.375 with a cost of 1328. So now you see how that 7.375 is $1,500 less in cost about going with the Loan Store than with United today. And that's why you got to work with a broker, because you need to be working with someone who has many options and access to many different banks. So if they were to pay a point here with United Wholesale, like I just said, we're at 6.999. As we expected, we could find that 6.999, that 6 handle for 1 point. And what about that 5.99? Again, just under 4% at 3.924. So not much of a difference there, but that is a long way away from where we once were just a few months ago. So that is where we are right now. Make sure that you do like, subscribe, share, and hit the notification bell in the top. If you have any questions, or if you do, again, have any clients that may want to know more about how this works, please reach out. You can always email me, brent@myranchocapital.com, or give me a call as well. 615-721-2909 is my direct office number. Give me a call. Give me an email. Let's see how we can help you out. Have a good day. I'll talk to you again tomorrow.